Yeah, hello and welcome to another update video about Bitcoin. Yeah, to be honest, there isn't too much to update here. Bitcoin rather quiet today, rather sideways movement, consolidation. Just a reminder where we come from here, from the swing low, which was back in June, the beginning of that WXY corrective Elliott Wave pattern. That's when we explored a potentially bullish option for Bitcoin. Yeah, I've always stated that it is basically too early to confirm that we are in a bullish breakout pattern, but as long as we stay above 18,900, we can be carefully bullish, or at least consider this option more likely, because the downside targets have all been reached by Bitcoin. We then dropped below 18.9k, which was basically the confirmation that the bullish scenario gets less likely, even though we only briefly dropped below it. That was here around the 6th of September. The problem is, while we only dropped below it briefly, it took out the bullish pattern. There are clear rules in the Elliott Wave method, and by dropping below that level, we dropped below this swing low here from the 13th of July, yeah, and by dropping below that level, we took out one very likely bullish scenario based on the Elliott Wave counts. Does that mean we couldn't go bullish anymore from here? No, of course not. Can I rule out higher prices? Of course not. It just has become less likely, and the reason for that is that the, in my opinion, most likely bullish wave count scenario has been taken out. There is still one left, which would be Bitcoin as a leading diagonal, a scenario I showed you before. But the problem with that is that leading diagonals are not very often reliable, or at least not, the ideal pattern really. I would like to see a clean impulse to the upside, and we just haven't seen that yet. And by taking the 18.9k level out, it has just made, or it has just given the entire chart a more bearish touch, and basically a bearish hangover. Yeah, so we are still here, and from the high, which was the swing high of the wave Y, we moved down. It was at around about 25k. We moved down in a wave 1. I have no idea what pops up here, to be honest. Autumn days out. Anyway, we moved down in a wave 1. We moved up in a wave 2. We then came down in a wave 3. Now, there are various ways of how this can be counted. I think the wave 2 is established. I think that's fine. I think we can leave it in for now as it is. That's annoying that this doesn't disappear now. We just have to, I don't know why. Like, it's gone. Okay. From the high here at 22,800 then, that is where we started to expect a dip anyway. Yeah, we've been waiting desperately for this dip, which then also occurred. The dip has come into my target area, and now we need to see where we are. We are now at another critical junction point. So you always have these periods or times or points in the chart, these pivot points where you have to expect a move into the other direction. Does that always mean it happens straight away? No, of course not, but you could already tell here, because we had a 5-wave move up, that we were getting close to exhaustion of that trend, of that wave. So we then said we need to wait now for the next dip to tell us with more clarity what is the next most likely wave move, yeah? And that move happened, and based on the structure of that move, we will be able to understand now where ideally the price is going to head next. Now there's a couple of possibilities, and I can tell you the clear points from which one of these scenarios is getting more likely. So let me take that out. Move these to the side here. Okay. So the first scenario would be wave 1 to the downside is finished. So bear in mind, yeah, we made the yellow wave 1 down, the yellow wave 2. We are now in the yellow wave 3. That would be my assumption. Within the yellow wave 3, this is a 5-wave move. This can unfold in different ways. Okay, so again, here we've got here different scenarios, and we need to understand which one will get more likely at which point. For me, still, a likely option would be a sharp, well, not necessarily a sharp, but let's say a substantial wave 2 to the upside. That should normally go into the region, between let's say the 50% Fibonacci retracement level and the 50% and the 61.8% Fib level, maybe all the way up to the 78.6% Fib level. But if we go above the 78.6 retracement, it is normally getting very unlikely that it is still a wave 2. So the limit here would be around about the 22.1k level. Only an impulsive move above that level would make me consider again something more bullish. It's very important to understand that. So this is the key level, yeah. So ideally, I would like to see after such a wave 1 down, and you know, we can argue, was the wave 1 finished here? Was it finished here? It doesn't make a great difference. Both counts are possible. Yeah, but in both scenarios, I would ideally expect a stronger retracement to the upside. And then we would expect a wave 3 down. So if we see that clearer move up, especially if it's a 3-wave move, that would be a very, very clear signal that we will head down next in a wave 3 off the wave 3. So should see a very strong sell-off. All that provided we are staying below the 22.1k level. The other count or scenario is, and you see that actually on the screen, that we can say, all right, the wave 2 was already finished here. Yeah, so we came down in a 1, we had our A, B, C pattern, which would be a running flat, and we're then coming down next in a wave 3. This for me would become very likely if we drop below 19k. I mentioned that this morning. That is the lower end of my target area here. If we leave that to the downside, I think we're going down straight away to round about 16.9k. Okay. Another possibility is, and you know, they all point to the downside in the end. You just need to understand that they all point to the downside. And the last possibility which I see here is that, oh, by the way, in this scenario here with a very short wave 2, we talked about that as well, you can count this currently here as a potential diagonal pattern, yeah. 1, 2, 3, here the 4 and the 5 down. Now, this is micro counting. Yeah, I don't really want to get too deep into this. This is really micro counting. These micro counts get regularly invalidated. One more thing to mention here. There's one more count, and that is that the wave 1 wasn't actually finished yet. Yeah, here. How is that possible? That is possible in that we count from the top here. We can count 3 waves down. No, 4 waves actually. And then the last one, which is currently coming down here, would be an ending diagonal of a wave 5. So it is possible, yeah. And that means a wave 1 itself can unfold as a diagonal, of course, yeah. So you basically have this possibility as well. In each scenario, we would expect a wave 2 no, we don't expect a wave 2 retracement in each scenario. In one of them it already happened, and however, that is what I mean. If we go below the 18.9k level, yeah, or let's say the 19k level, I think we are going to see this scenario work out where the wave 2 was already in. I don't think that's a very likely scenario because the wave 2 in that scenario would have been very short. But it's a possibility. It doesn't break the rules. So the 19k level is a key breakout point to the downside. Yeah. So keep an eye on that level. And then what we clearly need to say, we don't know if we now see a stronger retracement to the upside or not in a wave 2. But what I can tell you, if we break above that descending trend line, for me, it will get quite likely that we're going to see this stronger retracement in the wave 2. So we are currently caught here, basically between the 19k level, below which we will see, in my opinion, a stronger sell-off in a wave 3, maybe down to 16.9k. And here, a possibility where the wave 2 isn't finished yet, and a signal for that, a first signal that this wave 2 is unfolding and starting, would be a break above the descending trend line, and the next signal would be a move above the previous swing high here at 20.5k. So these are the key levels, the key scenarios. I'd like to see a stronger retracement to the upside. I think it would be better. It would also lead to a less bearish outlook, in my opinion, to the downside. But keep an eye on this chart here by understanding that Yeah, I mean, we are basically here in a channel, right? So this has some meaning as well. A channel breakout will already give you a clue in which direction we're heading. These are the possibilities, irrespective of which of these is going to play out. Again, we're doing some micro counting here. Irrespective of which of these is playing out, the overall trend is down, and I would expect lower lows for Bitcoin below 17.6k unless Bitcoin can rally impulsively above the 22.1k level. That is a key pivot point above which the bullish scenario would get more likely. Yeah, and so we're waiting here for the decision of the market to which direction we break out. And I gave you the target levels for each scenario as well. So hopefully you like the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.